If you're just getting started in crypto, you're probably wondering why any of the markets move the way that they do. And you're probably lost. Welcome to the club. Now, if you are, watch this video until the end, because we're going to give you so many secrets that people keep behind paywalls as to how to have clear signals that show you when's a good time to enter the market and when's a good time to exit the market. Now, obviously, none of this is financial advice. This is education to help you understand. But I guarantee you, you will learn things that will help you have a clear understanding of why the market is where it is, how to participate in it, and how to protect your money from getting lost. I know that's a big guarantee, but let me see if I can fulfill it, okay? We'll show you signals on how to make decisions. We'll show you how to understand which way the market goes, and then have actionable steps. All right, let's get going on it. So in order for you to understand why crypto moves, you have to understand one concept. Nice and simple. Crypto is money. Okay, wait. Crypto is money. Money is called liquidity for a reason. All the money in the world, the supply of that money increases and decreases at different times. As more money is pumped into the system, or as some say is printed and dumped into the system, all of the asset prices go up. When that printing stops, the asset prices drop. That's all you need to understand. That if we imagine money to be like a pool, when somebody puts water in, the level goes up. So your assets get worth more money. And when somebody takes the water out, the level goes down. That's why it's called liquidity, okay? All markets are tied to liquidity. So a visualization I want you to have in your head is that the entire world's markets, all the money in the world, are like the ocean, okay? The biggest part of that ocean is the bond market, is the debt market. But let's call it the bond market, right? That's what it's called. The bond market, the amount of money in that market affects how much money is in the stock market, okay? The stock market affects how much money goes into the tech stocks, which is the NASDAQ market. The amount of money in the NASDAQ market is directly correlated to how much money flows down to crypto, because crypto is the future of technology. How much money flows into crypto affects how much money goes into Bitcoin, and how much money goes into Bitcoin affects the rest of the coins, okay? So when we pump in liquidity, when we pump in money into this ocean, it first goes to the debt markets, then it flows over to the stock markets, then it flows over to the crypto markets, and that's how crypto goes up. This cycle of waves is a 4-year cycle at this point. So it's not just that the Bitcoin halving cycle is the reason why things are pumping and dumping. You've probably heard that one before. It's actually because every 4 years, the governments have taken out massive debts, and they have to refinance their debt every 4 years. So every 4 years, when they have to refinance their debt, they print money and dump it into the system. And then everybody's houses, cars, crypto, stocks go up in value, okay? That's the concept that we're looking at. So these are 4-year cycles of printing money and then not printing money, and then printing money and then not printing money, okay? Like we discussed, bonds are the biggest market out there, okay? If you want to understand which way crypto is going to go, you simply have to look at the broader ocean, because the amount of money sitting in crypto is tiny compared to the amount of money sitting in technology stocks. And that's tiny compared to the amount of money sitting in all of the stocks. which is small compared to the money sitting in all of the debt out there, especially government and private debt, which is bonds. Okay. So looking at that, what can we look at to make decisions on which way crypto is going to go, right? If we're saying that the amount of liquidity that goes into the bond market directly affects crypto, and it takes some time for it to propagate down to crypto, then we should be able to look at a certain number of things and see that money being printed on the other side. And that's what we're going to show you today. So here we go. All right. The first indicator I want us to look at is this chart. Okay. This is the Global Liquidity Index. This does come from a paid source, Rio Vision. They're world-class. They advise hedge funds and the biggest investors in the world. It is a paid indicator, but fret not. We have access to these indicators, so we will bring them to you over time. So keep watching and we'll make sure we get you this stuff. But this is the Global Liquidity Index. It is an index showing you how much money is being printed globally. Okay. As you notice, as money got printed, crypto went up. And in 2018, when the money stopped being printed, crypto went down. Okay. In 2020, because of a certain little cough, money got printed, so crypto went up. And when they stopped printing money, crypto went down. Until now, where they started printing money in little bumps and crypto went up in a similar bump. So this is a clear indication of how much money is being printed and dumped into the system, which tells us that assets will follow along accordingly. So looking at this now, the money printing has started in some capacity, but it hasn't kicked off in the big way where we would be looking at a massive bull run happening. But it's good signs. So this thing is signaling that the worst is behind us. There's probably still some more pain ahead, but beyond that, we're looking at another cycle of money printing and assets pumping and so on and so forth. So as a beginner, what does all that mean? It simply means we're at the bottom of the wave. And what you want to do as a beginner is understand that you want to buy at the bottom range of the wave, right? You never can buy the bottom, the very bottom, but to buy when things are low and sell when things are high is the whole point. So this is signaling that things are low compared to where they were before. And this will happen in sharper and sharper waves as time goes. Now, how do I know that? When you study the history of currency collapses in the past, or the shifts of the world in the past, World War II, the French Revolution, the American Revolution, the Civil War, all of those times, you could see that volatility went crazy. All that means is first things were little bumps, then bigger bumps, then bigger bumps, then bigger bumps, and then crash. And then the whole system switches over. Okay? Now we've seen this. We were used to living in this more stable world where they were just printing money and you were going through these little bumps. And then we saw this big bump. Now we saw a way bigger bump. We're probably going to see another massive bump of money printing coming up. So that means this thing is signaling that now is a good time to buy. And in the future will be a good time to sell once this wave has gone up. If this is confusing, make sure you don't invest in crypto, because this is so simple that if this confuses you, you're going to lose all of your money in crypto. And one more thing before we go forward. Never, never, never just use one indicator or a few indicators to make your decisions. The same way you don't want to just listen to one guy on YouTube and make all your decisions. The whole point is to use all of these different indicators to build a cohesive picture and understanding of where the world is, and then make your decisions from there. Because the more things that indicate that this is a good time, the stronger your argument becomes, and the less likely you are to lose all of your money in this space. Okay. So now we're going to go to my favorite indicator when it comes to this space. This one is called the IS-PMI, okay? You can actually search up USCOI on TradingView, USBCOI, and it'll show you, okay? It's called the IS-MPMI. What this is a signal of where the business cycle is, because money being printed equates to business doing well. This is the producers manufacturing index, what the producers are producing, okay? Don't worry about all that. The point is, this is a signal of which way the real world is going. The market actually is going, not the hypothetical market, okay? So this orange line is that representation. As you can see, it oscillates, right? It goes up and down, and up and down. When it's up, it's time to take profits, in my approximation. You do what your strategy says, but the way I look at it is when it's up, it's time to take profits. When it's down, it's time to buy, right? Because when it's down, it's telling me that right now, the global market's productivity is down. So in simple terms, when it's down, you buy. When it's up, I sell. Not you. You do whatever you want. I buy and I sell. So if you look at it, going back to even 2014, okay, this is crypto down here, and this orange line is the PMI. When it was down, it was a great opportunity to buy. You would have got Bitcoin at $5 or $10. When it was up, Bitcoin was at $1,300. When it was back down, Bitcoin was at somewhere around $200 to $300. When it was up, Bitcoin was at, $20,000? So you get the idea. Now, this most recent time, it came down and Bitcoin was at $11,000. But during COVID, when it spiked down, you could have got Bitcoin at 6,000, 5,000. Again, we're not trying to say that any of this is showing you how to call the bottom. That's not even the point. The point is, when we're down here, when we're below the 50 range on this indicator, then it's a good time for me to start to buy, okay? And I just buy in that whole zone. And once it gets up here, above that 55-ish range, that's when I start to sell in a significant way. So this is such a beautiful indicator because it's giving you a real world perspective on which way things are going. So now this thing started to take a turn around April, okay? And now it's been turning around and looks like it's headed up. Now, could it be one of these where it goes up and then it dumps down? For sure. It definitely could be. And I think that might be what's about to play out. But again, what I think does not matter. With indicators, is it lower than 50? Yes. Is it at a point where it's historically low compared to its own indicator level? Yes. Okay. Then this indicator is telling me it's a good time for me to start buying, for me to start dollar cost averaging. Okay. It's a beautiful indicator because it's tied to the liquidity. So now if we know they're starting to print money and the producer manufacturing index, the PMI, is starting to turn around, then that's a really good sign that things are going to be good in the future. Okay? That's two indicators that are telling me that good times are ahead. Now, the next one we should look at is the dollar. Okay? This blue line is the US dollar. The way you want to understand the dollar is where money goes to sit when it's not invested in assets. And when it's not going to the dollar, it's going to assets. That makes sense, right? You buy assets and then you sell it for dollars. So you hold your money in dollars or you hold your money in assets. So when the dollar is gaining strength, assets are going down, which means when dollar's going up, assets are going down. When assets are going down, dollar's going up. Pretty simple correlation. So let's look at the history. Okay, so dollar was going up back in 2016. Assets were going basically nowhere. When the dollar dumped, crypto pumped. Then when crypto started dumping, dollar started pumping. See that? And then add the dollar pumped all the way until COVID, crypto did nothing or was basically was not making you too much money. When the dollar dumped, crypto pumped in 2020. Okay, and then ever since then, when as Bitcoin's been going down, the dollar's been going up. So for this one, we want the dollar to be going down. So when the dollar starts to go down in a significant way, that's when we know that money should be flowing over to crypto. Now, just the dollar dumping doesn't mean crypto's going to pump. You see that? Dollar dumped, crypto didn't pump. I mean, dollar dumped a bit and crypto pumped from here to here. So yeah, there was a difference. It doubled in price. You know, it's funny that in crypto, we don't consider that to be a pump, but it's 100% growth from the dollar dumping. What I'm talking about when I say pump is these kind of massive bull runs that we see. So the dollar has come down a significant amount, but it's kind of bouncing around. And at some point, the dollar is going to go significantly lower, back down to these levels or probably even lower. That's when we'll see the massive next crypto bull run, according to this indicator. But in simple terms, when this one, DXY, you can find it on TradingView, when it goes down, crypto goes up. Now, when it goes down and the liquidity index goes this way and the business cycle starts to turn, the PMI starts to go up. Now, when all those things line up, that's when the good times are coming back. So 2 out of these 3 indicators are showing that good times are ahead. One of them has signaled that things are starting to move in a downwards trajectory, but we have to wait to see what the dollar does. The next one I want to look at is called the NASDAQ breadth, the NDTH. Okay, you search NDTH, you can find it on TradingView. And if you're like, Sim, I'm a beginner, I don't know how to find these on TradingView. Well, then that's what we're here for. We follow these indicators and we explain them to you in simple English. So please make sure you understand these things, or at least have somebody to show you how to read these things. This one is an indicator of how many of the stocks in the NASDAQ, which is tech stocks, are participating in the bull rally. Okay? In simple terms, when this yellow line is down below, let's say this 44 range, 45 range, that's when it's a good time for me to buy. That's how I look at it. And once it goes up, this one is not as good of a sell indicator because even when it's up, crypto could take a while to pump. But my point is, this is a great buy indicator for me. So when it goes down to these levels, I'm happy to buy. Again, back here was a great time to buy. It'll probably come back down again and give us one more opportunity to buy. So this is NDTH. When it's low, for me, it tells me it's a good time to buy. So now if all 4 of these indicators are lining up, that tells me a lot. That tells me they're printing money and dumping it into the system. Check. That means there is the business cycle is starting to turn around. Check. That means the markets are going to grow going forward. The dollar is bleeding value into assets. Check. That means assets should go up in price. Right now, there's a good buying opportunity. If this was low, this would be a good buying opportunity for technology, which means I should be buying technology, right? So this is how I build a mental model of how to make decisions in crypto. Fantastic. Now, the next set of indicators we're going to look are going to be a little bit different because these indicators we've been looking at are very clear, concise, and they're clinical indicators. The next one we're going to look at is an emotional indicator because markets are actually driven by fear and greed, 2 emotions. You want to buy when there's fear in the market, and I want to sell when there is greed in the markets, okay? So this is the fear and greed index. In simple terms, when it's way down here in these zones, in the 20 to 10 zones, that's when I love to buy. So this thing is saying back in June, July was a good time to buy. In October was a good time to buy. All those kind of times are a good time to buy. So again, this is a signal of, are people scared? If people are scared, they're willing to sell stuff for cheap, in which case you come in and buy. And when people are greedy, they're willing to buy it for very expensive prices, in which case you come in and sell. Okay? So this is a great indicator to look at the psychology of the market. Now, a beautiful indicator that I love is this indicator. This is called the Bitcoin Rainbow Price Chart Indicator. Okay? This one is charting the growth of Bitcoin along this colored chart. Okay? Bitcoin is growing in a clear channel because it has a parabolic growth channel, and this is on a log curve. If you don't know what that means, don't worry about it. In simple terms, when it's in the bluish zone, that's when I love to buy. When it's anywhere up in the yellow and above zone, that's when I love to sell. Easy. You don't need to complicate these things. Now, this combined with the other indicators, blah, blah, blah. I've already said it a bunch of times, but make sure you're careful about that. Now, it's telling me today Bitcoin is down in the blue zones, which for me tells me it's a good time for me to buy this asset. And as it goes up into its yellow and above zones, I will be selling them. Simple. Now, this thing is saying it's a good time to buy. The fear and greed index is kind of midway. These three indicators, two of them are telling me it's a good time to buy. This thing is telling me it's a good time to buy. So in the end, there's a lot of signals that are telling me that it's a good time to buy. So I'm leaning more towards buying than selling. Are all my indicators saying that? No. But do I need all of them to say that? No. If all of them say that, then I'm happy to take a massive risk on the market, right? So the more indicators that are indicating that it's a good time to buy, the more risk I feel like taking in the markets. Now, another favorite one that I have is this one. It's called Market Cipher. This one is a paid indicator. It does cost thousands of dollars to buy, but lucky for you, we're going to get you a discount. No, I'm just kidding. We have a subscription to this thing, and we are going to read this indicator out and follow along with it. So if you don't want to spend thousands of dollars, watch us for free. Because I don't believe in keeping everything behind a paywall. That's why we're pulling out this paid content and giving it to you for free. So this one, in simple terms, this is the momentum waves down here, okay? The green one is how much money is flowing in. The red one is how much money is flowing out. But in simple terms, the simplest way that I like to look at this indicator is when this green dot gets printed on the weekly, okay? We're very zoomed out. And when this thing prints a green dot, that means this thing sensing that is a bottom of the market, and it is a great time to buy. Now, is that the only great time to buy? No. In my way of doing it, in my strategy, when it signals that this is a great time to buy, I buy from here and I just slowly keep purchasing at these low zones. Because, then you would have got Bitcoin at $3,500 up to $12,000. And if I buy during those times, my average would end up being somewhere around $6,000. And buying Bitcoin at that time for $6,000 and selling it between $40,000 and $70,000, that's how the game is played. So this thing, on the very zoomed out scale, recently printed a green dot. Well, recently. In July of 2022, it printed a green dot. Now, this green dot does take some time for it to print, so it doesn't print right away. But my thing is, it signaled back here that there was some kind of a bottom. Now, was that the bottom? No, because we are not into finding the bottoms. You may like bottoms. We all like bottoms, but this is not what we're trying to show here, all right? We're just getting a signal to say, yes, we've hit an indicator that's saying it's a good time to buy. And from there, start buying. And I continue to buy until I start to see these indicators flip to the other side, which is the sell side, okay? I wouldn't even say that. I do my best to buy within the bottom 20% zone. That's the honest truth. But this thing said, it's a good time to buy. So from then until now, I have been buying. Pretty simple, right? But that combined with all of these other indicators goes a very long way. So in realistic terms, if this thing signaled back here, one of my indicators says in June 2022 to buy, I didn't just start buying everything then. I was like, great, one indicator saying we're good. Then going back to the rainbow chart, it hit back here in same time, June, July 2013 or 2022. July 13, 2022. So that's two indicators saying to buy. Well, that's good. The fear and greed index was low. That's three indicators saying to buy. That's great. looking at the PMI, it was still coming down and it wasn't below 50. So this one wasn't saying to buy. So I personally didn't take a massive risk on the market. I waited. This thing was showing that we were still dumping down. The amount of liquidity that was pumping into the markets was not coming back. So the biggest indicator for me, being liquidity, was saying that it's still not coming back. So I didn't buy at those times. My point is, one indicator does not make a good strategy. 2 indicators, nice. 3 indicators, that's a pattern. But I like to have 5, 6, 7, a lot of different indicators telling me the same thing. So now all of those other indicators have turned. This one signaled it back here early. The other ones are turning now. So now I'm starting to become more and more confident that I like to enter this space. And I don't care if I get it at 15. I don't care if I get it at 20. I don't care if I get it at 30. Because I personally don't buy Bitcoin. And we'll talk about that in a second. After this one, here's another great paid indicator that I like to follow. This one is Steve's Fibonacci. This is worth thousands of dollars. And you can buy it for about $700. But again, you don't have to buy it because we will follow it for you. This one is a simple chart that shows you how Bitcoin bounces between these moving averages. Moving averages. Okay? They're Fibonacci moving averages. In simple terms, because we only speak about beginner talk. In simple terms, down here, around the blue line or below, great time to buy. Up here, above the yellow line or above, for me, great time to sell. Okay, well, it's telling me that I'm in a good time to buy. And this whole zone has been a good time to buy. Doesn't matter if it's 15, 30, all of that's a good time to buy. Simple. Okay? That's another indicator telling me it's a good time to buy. Now there's a lot of indicators showing me that it's a good time to buy. Here's another one. It's called a heat worm. It's also a paid indicator. It has these buy signals at the bottom, but I like to just visually look at things. When it's in these dark blue zones, or the blue zones in general, it's a great time to buy. When it goes into these green and red zones, that's when it's a good time to start selling. Okay? So same thing. Blue, buy, hold, buy, start selling, sell it all the way up to here, and then get out. Now it's been saying that it's been a good time to buy since the same time. So you can start to see that a lot of these indicators start to build a picture that aligns, right? If money is flowing in and the business cycle is turning and we're looking like we're in the ranges at the bottom of the charts where we've been before and it's been a good discounted price for me to get in, why wouldn't I get in at those times? That is how I like to take out the emotion from this process, because you're going to be scared of buying now. All of us feel fear. So we feel like the terrifying times are the times not to buy. When the indicators say those are the times to start to take a healthy risk in these markets. Now, here's a golden nugget for you, okay? Here, let's look into the future and let's predict, because these are just up until today. How can we look into the future to see, are they going to print money in the future or are they going to not print money in the future? Because if it's all about printing money, show me a chart that is showing me the future printing money curve, Sim. Lucky for you, we have that. This is, again, coming from a $50,000 subscription to the global macro investor that the biggest hedge funds in the world have. And that's why they have information that most people can't access. But we're bringing it to you because we love you. This gold line is how much debt the federal government of the US owes going forward. This white line is how much money they print. As you can see, by the end of 2023, the debt that the government has starts to go up. The debt load, the interest payments they have start to go up. Into 2024, they go up significantly. Into 2025, they go parabolic. Make your own assumptions, but I am preparing for them to print a ton of money into 2024 and print a ridiculous amount of money in 2025. So this is a forward-looking way of being able to see how much money is going to be dumped into the global ocean. So according to my approximation, we have the next 2 years to be the best time in crypto that's ever going to happen. See, I can't even say the words. I'm so excited, I can't even get the words out of my mouth. But the next 2 years look like they're going to be absolutely fantastic because they have a lot of debt to pay, and there's only one way governments pay debt: print more money. So all of that are the indicators that are indicating to us that in the future they're going to print a bunch of money. They've already started to print some money. The business cycle is starting to turn around. There's many ways to look at the market, and it's starting to recover. This looks like it's the bottom 20%. But how do we know that it's the bottom 20%, Sim? You simply go look at how many discounts we have out there. Right? In the real world, when you want to buy something and it's at an 80% discount, that's when you jump on it to buy it, right? In the crypto world, for some reason, when things are pumping in price 200%, 300%, 400%, 500%, that's when people run in to buy it. So that's where emotion takes over logic. But let's look at the discounts that are out there. This is Solana. It's at a 90% discount, 92% discount. When Solana was $260, if I had told anybody I'll give it to you for $20, all of it would have been bought. Yet today, at a 92% discount, people are still not buying it. With all of the indicators saying it's time to start buying, for me, Solana is a great buy. Now, if you buy Solana and lose all of your money because I'm telling you this, that's your fault. Don't ever buy things just because one person tells you to do it. This is not financial advice. This is not telling you what to do. This is just education for you to be able to figure it out, because a lot of people will buy Solana at $20 and still lose all their money, okay? Make sure you have a plan. Make sure you have a strategy. But my point is, Solana is at a 92% discount. Great. That means it's in the bottom 20%. Phantom is at a 94% discount. That's a great discount. Atom is at an 84% discount. Fantastic. It was, what was it, $48 before? Yeah, it was like 40 something dollars, and now it's at $6.70. What a great discount. Matic, Polygon, is at an 81% discount. Fantastic. It's in the bottom 20%. I didn't do Algorand properly. Link is at an 88% discount. So I'm not going to do all of them. And please don't just go buy these things just because I said it. That's how beginners lose all their money. But things are at massive, massive, massive discounts. And for us to go out there and use the indicators and this mental model of the world's money being printed and dumped into the system, and the future outlook of money being printed, and these amazing assets at these discounts, that's how you get confidence of knowing that it's a good time to enter the markets. So hopefully all of this has added value to your life. If it has, I don't care if you like or subscribe. I know I'm supposed to ask you, but I literally don't care. But hopefully you use this to actually improve your life. And if you watch this far, you are one of the few people that are actually going to make it in this whole process. Because being able to pay attention to information like this can be life-changing. I've seen it happen. People have saved millions of dollars by using logic rather than emotion, and other people have made millions and millions of dollars. So thank you for watching. Thank you for taking the time to learn. Good times ahead, and we'll see you next time. Much love.